Monthly chart, look at this green candle. Shorts have been eviscerated. You just can't deny this is probably the candle of the year for the first half of at least 2023, this giant green candle with only 9 full trading days left in the quarter, first half of the year 2023. You got to ask yourself, where are we going to close for June, for the quarter, for the first half? And it really is hard to make a case for the bears to get below even the halfway point, which would be around 43.50 and change, up or down, give a few points. I'm just eyeballing it here. But what was really impressive was how we closed out Friday without quite making 4,500, just below it here. And we opened on the RTH. We created this wick for the month of June, but I want to be very careful on the lower time frames because I want to respect what they did in June. On the algo, I think it's been pre-priced in, and as we go into the July 4th holiday coming up in the not too distant future, I want to then see if we do any kind of price consolidation more in July. Let's go to the next time frame. Okay, weekly chart. Of course, June is the belle of the ball of the monthly for months. June's going to be looked upon as the breakout month, and the week that made June, at least so far, was this second week here where we had the new week open gap, open at the bottom of the candle, and then by the end of the week we closed way up here, a solid 100 plus handles on the week from the new week open gap to the close. Let's go to the next chart on the daily. The daily gives me a little bit more of a perspective. So here's how we started the week. Again, big up green candle, and then on Monday to Tuesday, volume imbalance. And so then Wednesday we open, and again, that was a big day because of the Fed day. And then volume imbalance again created. So that's the second for the week. And then Thursday, the day after the Fed, which is basically a big day of the week, the largest, green. And so that goes up here. And then we open on Friday, New York, midnight open, London, you can see in the top portion. And then on Friday, we go all the way up here to the open, but we fall short of 4,500. So again, this is the perspective of the week here. We really didn't decline that much here. This is not a bearish. And the idea here is we could still challenge before the 4th of July or maybe the 4th of July and after this 4,500. So I'm not bearish here. I'm just looking for modest retracements at certain periods of the day. And I'm cognizant of the idea that we've only got a few more days left in June. Let's go to the next chart. 1 hour chart. So what I'm focused on is this BSL buy side liquidity level at 44.86. So you can see how the 1 hour candlesticks really for a lot of the session on Friday balanced out below the relative equal highs of 44.86, and we're in a zone from 44.83 to the lower level here of 44.74. And then the afternoon silver bullet, we lost the fair value gap balance zone and went down to a new fair value gap on the 1 hour chart. And that came on the top of the fair value gap of 71 at the top, and the low is 65, and we closed below that. How do I feel about what's going forward? I'm just going to sit on hands. We've got holidays, and when you have holidays and 3-day weekends, it's important not to jump back in on the first session, especially the electronic session. The only way I'd think about it is if we were somehow able to go above 4,500 during the electronic Globex sessions of Monday and Tuesday. So if that's not happening, I'm sitting on hands and waiting for the RTH, most likely afternoon session. Time stop alignment amplification. If I had to skill somebody up to get them to a better decision maker, quitting is the primary skill I would choose, because the option to quit is what allows you to react to that changing landscape. Annie Duke, Quit, The Power of Knowing When to Walk Away. Better to learn to anticipate, learn to engage, why you're doing it, when you're doing it, and when not to do it, which is more important than you taking a trade, because there's more time in the market for you to lose money than for you to be aligned with the market and make money. ICT. Journal update for June. So when your prop eval model outperforms your brokerage account, this is precisely what I found. And it's a happy outcome for me because I've spent close to 10 months working on my prop eval model, and it's taken a lot of time to conform to the rules of what it takes to pass an eval, be a funded trader. And I wanted to quote this Palladian kid. He's unbelievably successful at a very young age, and he's founding with his partners a new prop firm. Not that I'm endorsing it, but I just like the stats he posted. Number one, 70% of funded traders lose their funded accounts within the first 2 weeks. That just tells me that is way too high. And number two, this is the most interesting fact. 12% of funded traders in a prop firm take only 3 to 10 trades a month, and yet they take out more than 55% of the total payout. That's amazing right there. And as a recovering over trader, for sure, this is what I really take home. So what am I going to do with this information? What have I been doing with this information? So when my prop eval model is outperforming my brokerage account, I pivot, period. Brokerage account needs to better model the prop model, period. So that is exactly what I started to do. And that's why I flexed last Friday about not trading, because no way would I touch it for the prop account. And even though I saw a setup that I wanted to take with the brokerage account, I just didn't do it because I need to better model what's working week in and week out with consistency, which is trading less and getting more of the prime setups taken and then sit on hands for the rest of the time. So this has been quite a journey, because we're talking the prop model for me is only 10 months, where my brokerage account is modeled for years. But it's a hodgepodge of thrown together reasons for me to experiment like a mad scientist. And I got to stop that. I got to just pick my model, stick with it, and then only tinker with it when I've really properly back tested it. So this is where I'm going for the second half of the year. I'm going to basically keep an alignment between these two things, and I will update. Thanks for watching. Appreciate it. Take care. Aloha. Bye.